$601 in about 35 minutes today. Stick around and find out how I did it. Today was 3 trades, Amazon, TLRD, and KR for a total of $601. It was a very frustrating day because at one point I had about $1,500 in open P&L, which was about 3 to 1. I was thinking to myself, maybe delusions of grandeur. Hey, maybe it's going to be a $3,000 day. All 3 trades are going to work to 2 to 1, and we're going to have a fantastic trading day. Well, that's not exactly how it played out. So let's take a look and see what happened. First trade of the day, guys, was Amazon. And as always, we start with the daily chart. Amazon had a daily buy setup in a stage 2 uptrend. So the pre-market chart of Amazon over $2,000 was really nice, but it was only nice because the daily buy setup was triggering right around that $1,995 to $2,000 area. So after we look at the daily, I thought, wow, the market is gapping up. Amazon is gapping up a little bit, and when the market is strong, Amazon is strong, and when Amazon's strong, the market is strong. I thought, gosh, the market triggers a daily buy setup. Amazon triggers a daily buy setup. We're going to get that perfect combination type trade where the market pushes your stock. And I really believe today that Amazon was going to go up about $30 or $40, maybe $2,030, $2,040, something like that. So now we drill down to a 2 or 5 minute pre-market chart. Okay, it's very important. Pre-market chart here. Not a lot of you guys use pre-market charts to trade, but I do, and I find them to be very helpful for getting reasonable stop losses and getting in trades earlier than most other people are able to. So if we use the 5 minute pre-market chart, I bought some Amazon around 9:20 and I added at 9:29 and then again at 9:31. So once it broke above the $2,000 mark, which was just a beautiful 5 minute consolidation breakout, I used a very wide stop loss around $8. Even if you used a $5 stop loss, it would have just missed our target. So we used an $8 stop loss under the consolidation, and basically we needed about a $16 target, all right, 2 to 1. So that gave us a target of around $2,016. Well, Amazon went up to almost 2009, right, just under that, which was just over 1 to 1, and then came all the way back down. So I put my stop loss at break even because after 1 to 1, that's what my plan says to do. Amazon came all the way back down and stopped us out at break even. So it was a little bit frustrating to watch almost $600 go to zero. Actually, it was minus 28 when I was done, but that's what the trading plan says to do. That's what happened. It is what it is. On to TLRD. This stock had a really nice gap over the $27 area, over the daily consolidation. Remember, we always start with the higher time frame, right? So when we gapped over that consolidation, I thought, you know what? If we can get over 27.80, 27.79 on the daily, we have room to about 28.50. So that's kind of how I was ranging this trade out, right? So we took it at 27.79 with about a 30-cent stop, and we're looking for about a 60-cent move. Well, it popped up really quickly, about 50 to 55 cents, and came right back down. I thought, oh, shoot, right? We just missed our target by 5 or 10 cents, and now it's going to stop us out at break even because I raised my stop up after the thing popped 1.7 to 1. Well, thankfully, it held break even, right? It came down to about 27.85-ish. Our break even was around 27.80. Then it pivoted and came all the way back up. I got a little bit jittery, a little bit nervous, and I got out a little bit too soon. I should have made $1,000. I made about $850 on this stock. So a little disappointed with my management, but I also feel lucky and fortunate that it held break even and pivoted higher, right? So we have the daily chart with room from 2780 up to 2850. And then if you take a look on the 2-minute chart, right? The 2-minute chart is beautiful consolidation right there at 2780 with a stop at 2750. It was a beautiful play and it was a beautiful result. It ended up popping about $1, so almost 3 to 1, right? And then it came back down and stopped out later. But by that point, we had already gotten our money out of it. So it was a very good play, and I'm pleased that we took it, especially after the Amazon kind of teased us and messed around and then ultimately got us at break even. Now, the last trade of the day was KR. Okay, this had a gap down, and we were looking at this stock in the pre-market having room from the $29 area down to about the $27.75 area. So we had about $1.25 of range because there is a daily pivot support area at the $27.75 area. So when we saw this in the pre-market, I thought, you know what, this isn't bad, but we need to give it some more time. So eventually, KR opened up, popped a little bit, and then came back down. And then on a 2-minute chart, we got a little bit of a consolidation breakdown, a little bit of a pseudo 3-bar play, and right around 2850, we entered with a stop at 2880. Well, ultimately, KR dropped to 2830, which is only 20 cents on a 30-cent stop, and then it went completely the other direction. Now, this is good, and this is bad, all right? So, we would have taken a full stop on KR, minus $500, and that's what should have happened. But I didn't like the way KR was acting, right? When the market tanked and pulled back, KR started to turn around and go higher, and I thought, this is curious, very unusual for a stock to do that because I'm not used to KR being inverse to the market like some of the oil stocks. So I lowered the stop loss to 28.60, right where VWAP was at the time, and we ended up losing about $160 or $170. So we actually saved about $340 on that. So anything that I cost myself on TLRD, 150, I got back when I saved $340 on KR. Now, here's the truth of the matter. Was I right today? I was. I was right to move my stop on KR, okay? But in the big picture, over 1 month, 3 months, 6 months, 1 year, 500 trades, 1,000 trades, it was a very bad idea to break my trading plan today. So despite taking 3 quality trades, I actually didn't trade that well today because I broke my plan not once, but twice. I got out of TLRD early, and I got out of KR early. One hurt me, TLRD, one helped me, KR. Net net, I ended up better. But in the big picture, this is a very bad way to trade. All right, we call this winning the wrong way. All right, so I want you to take a lesson from this. I'm a professional. I do this every single day. I take 1,000 trades a year, and guess what? I still mess up from time to time. Big picture, it costs money. So you have to work on being consistent and disciplined every single day, guys. Now, one other comment before I let you guys go. Look, trading can be frustrating, all right? I saw $1,500 open P&L today, and I only closed out $600. That's frustrating. And some of you, what will happen is next time you're up 1,500, you're thinking about the last time you were up 1,500. And guess what? You're going to click, hit market, and you're going to get out. And that's the day they're going to continue higher, and you're going to make $3,000, and you only made 1,500 on that day. You have to follow the rules of your trading plan. If you don't follow the rules of your trading plan, you don't have a trading plan, and you absolutely, unequivocally will not be successful in this business. Period. End of discussion. One of the biggest reasons traders fail is 1, they don't have a trading plan, and 2, they don't follow it. It's either they don't have it or they don't follow it, or both. Okay? You have to have a plan and you have to follow it. Guys, all technical analysis trading is, it's simple. We use past price action to predict future price movement. And in doing so, we are playing statistical probabilities. What that simply means is I'm going to win 5 out of 10. The problem is I don't know which 5 trades out of those 10 I'm going to win on. I don't know. I might win the first 5 in a row and lose the next 5 in a row. I might win every other trade, the first trade, the third trade, the 5th trade, the 7th trade, the 9th trade, right? Or I might lose the first 4 in a row, then win 5, then lose another. I have no idea when the winners are going to come. Therefore, if you break your plan, how are you going to make money in this business? Because you need to be consistent, right? If you flip a coin 10 times, you could get 9 tails and 1 head. If you flip a coin 10,000 times, you're not going to get 9,000 tails, right? You have to believe in the statistical probability of this business. If you don't believe in that, you can't be a trader. Just give up now, quit. If you don't believe that the statistical odds are in your favor in the long term, then this isn't the business for you. So consistency pays, guys, and good money management. One last caveat. I see way too many traders out there, and I mean way too many traders out there, okay, risking too much money too soon. They're in the business 1 year and like, well, I've been doing this a year. And my question is, are you profitable? And their answer is no. So I'm asking, well, why are you risking $1,000 per trade? Oh, well, I can afford it. I have the money to do it. Well, that's dumb. Bill Gates, Jeff Bezos, Mark Zuckerberg, they don't like to lose money unnecessarily. That's just foolish and silly. That's terrible money management. I don't care if you've been doing this for 5 years or 5 days. You should be at $10 or $20 or $30 risk per trade until you show consistent profitability over at least a 3 to 6 month period. Then you can slowly begin to raise your risk. Money management is your first job. Why? Because money management is what protects your trading account. Without a trading account, you can't trade anymore. And you don't want to lose money unnecessarily anyway. Guys, blowing up a trading account is not a badge of honor. It's just stupid. Okay? So I hope you learned a little bit about how to become a successful trader. Amazon, TLRD, KR, $601 today. Disappointing day, broke my plan, was up $1,500, but all in all, I actually ended up a little better than my plan. 600 is okay for 35 minutes of work, but when you're hoping for 2,000 or 3,000, it is what it is. But you know what? We come back and we do it again tomorrow, guys. That's the beauty of this business. It's the greatest meritocracy in the world. There's no boss that says, well, I don't like you, or I don't like the clothes you wear, I don't like the college you went to, right? Nothing. It's just you and the markets and you in your office with a computer. Nobody is there, okay, to step on your toes. If you make it, it's because of you. If you fail, it's because of you. That's what you want in life. Meritocracy, okay? I love trading for that reason. And guys, also, stay tuned because pretty soon, next few days, I'm going to be putting out a video on why trading is so wonderful. I did a video last week on why trading is so hard. Well, this week I'm going to do one on why trading is so great, all right? Jared Wesley here of Live Traders, $601 today. I'll catch up with you guys again soon. Take care.